So let me show you how to buy and sell a stock option. So let's get right into this using my demonstration account. It's a small account that I use to share ideas and do demonstrations. And what we'll do here is buy and sell a stock option for demonstration purposes. So we may win or lose. That really does not matter. It's more about how to go about this and some of the things you want to think about. And I'll go into more detail after I do the buy and the sell and maybe answer additional questions that are very common in stock option trading. Now, first of all, you need to figure out which stock you wish to buy an option for. Now, not all stocks have options, but most of the big ones do. And you definitely want to consider a high volume stock or ETF. The advantage to using high volume stocks is you have a smaller spread between the bid and the ask, the buy and sell price of that stock and option. SPY is a good one. That's the S&P 500. It's a highly liquid ETF. You have QQQ, IWM, or maybe you want to use Apple. Whatever it may be, it should be, especially in the beginning, a high volume stock or highly traded option that will improve the chances that you get a good price on the buy and the sell of that option. I'm using the Ameritrade system here. You may be using a different platform. However, it should be very similar. For Ameritrade, I would just go under Trade and Options, and I will put in SPY to look up what is referred to as the option chain. And the option chain shows you calls and puts for specific strikes and expiration days, which I'll explain more in a few moments. These calls are in the money and these puts are in the money. A call means you feel that the stock is going to go up, and you would buy a call. If you feel the stock is going to go down or the ETF is going to go down, then you would buy a put. Now let's look at the full option chain. Here's the option chain range with both calls and puts near the money, meaning the break-even point. As you see, SPY is currently trading around $375.33. Over here, this option is $375. That means it is in the money by, as we can see here, 38 cents. As we can see, this call for $374 is in the money about $1.38. As for puts, you can see the in the money number is $376. For this example, we'll buy a call, and as you can see, the bid and ask difference is about 2 cents, which is not bad at all. Now, these calls expire in 4 days, so this would be good for maybe a day trade or an overnight trade. That's what we do at SPY Tomorrow. We actually buy at the very end of the day, the last seconds of the market open, and then sell the next morning based on the signal that SPY Tomorrow offers. The cost for these calls, it says $3.25 here. However, you have to times that by 100. So this call, to buy one call, means you would spend $325. If you don't want to spend $325, you can move down to a call that is out of the money. If you think it's going to go up over the day or overnight, you could buy a call for $181. And let's say SPY goes up a couple dollars, we can estimate that maybe it would be worth $250 to $270. If you wish to go further out of the money, you can do so by clicking on out of the money and just focus on the calls out of the money and view the chain. And as you can see, everything that is shown is out of the money and of course much cheaper. Of course, there is more risk the further out of the money you go, especially with an expiration date only 4 days away. However, you can certainly find options with expirations much further out, such as 31 days or 140 days or 350 days. However, you also notice that they are much more expensive that further out because there's more time. There's a higher premium attached to these options. And that premium is an important thing to understand. That premium goes down the closer you get to the expiration date. So obviously 49 days out, the options are a little cheaper. 28 days, a little cheaper. And then of course, 4 days out, much cheaper, because there's less time for these calls to actually make it in the money. If a call hits the expiration date and is not in the money, it is then worthless. So let's buy a call option right now that's just out of the money for around $257. So we'll click here, and I like to add to my watch list. You can buy and sell right here, but I'm going to add to the watch list. I'm going to select my watch list, add, and as you can see, it is now right here on the side. And what I like to do is click buy, and we can buy one option. We buy to open. You have multiple choices. You need to make sure you know which one you're doing. Buying to close is not what you want. Sell to open, nope. Sell to close. We'll use sell to close to sell the option, but we want to buy to open. Make sure it is the correct option that you wish. This is a weekly option, a SPY July 5th, 2022, 376 call. So as we can see, it is out of the money at 375. And we will buy this out of the money call for 200, I would say right in between the bid and the ask. Let's try $251. Click review order. Oh, seems like it's going down more. So I'm going to change the order. Oh, it's going back up. Sometimes you chase these around. Sometimes you waste time doing this. So let's just put it in there and see what happens. So we got our buy to open filled. We bought one SPY July 5th contract at a strike price of 376. It's a call, meaning we think it's going to go up in value, and the price was $253 or $253. So now if we go to our positions, we can see there it is. And currently we've lost $6. The fact is the money moves quickly with options because you are in control of 100 shares of that stock. So we'll just let this run for a few minutes and see what happens. So the cost of this option was $253. What I can do is put a stop underneath it to make sure I don't lose any money if I am concerned. So what I will do is put a stop limit. So I'm going to have an activation price of $2.55 and sell it at exactly what I bought it for, just in case. Review and place. Oh, it was rejected. Maybe I did it incorrectly. Let's go back to positions. I like to click on this because this will give me the exact number of options that I had versus over here. And here I want to sell. I want to sell to close. Sometimes it'll put you in a different spot, especially if you click from over here. Sell to close one contract with a stop limit of 2.56 and a price of 2.53, which is my break even. Actually, break even would be, say, 4 with any fees. But actually, as it's up higher, I may just go to 5.9 and 5.5. Give it a little room because it can bypass you if it starts to fall quickly. So as you can see, I have an activation price, meaning it tells the market I'm ready to sell, and here's the lowest price that I will sell for. Now we could go down past that really quickly, so I'd like to have some room in here so it activates at 259 and I have all the way down to 255. Now here I see that it's up to 265. So let's get out of this and put this in at 268 and 66 as the activation price or the sale price, go, submit, and hopefully we'll get and there we go, and it was sold at the 266 price. Go back to positions, and we made $11 or 1.4% over about 5 minutes. So as you can see, if this call keeps going up, which it is, you could make 5, 10, 15, 20, or even double or triple your money if the stock or ETF keeps going up. Now, how much can you lose? The answer is the money you put in. So we put in $253. So we could lose as much, especially if we waited to expiration and the option was still out of the money, it would go to zero. How much can you gain? Well, you could double, triple, or quadruple your money. But it's important to remember you need to have a plan. You need to protect yourself because too many days of losing 25 or 50% most certainly can lead to a drained stock trading account. Now let me answer a few more common questions. I'm sure you have many more questions about how to buy and sell options, and I'm going to answer hopefully a few of those questions for you. However, the fact is there are many ways to approach trading options. There are many methods. It's not just directional, buy a call or buy a put. You can buy many combinations to actually help you increase the odds of coming out ahead. But, every system has its pluses and minuses, and it's worth considering looking at other videos, some of them on this channel, but there are many channels on YouTube that can answer your questions about stocks and options. So I would definitely take the time and look around and find a few people who you think are giving you good advice. We focus on SPY T trading here, which is the SPY Tomorrow methods over at spytomorrow.com. That's something that you may want to consider. It's just a swing overnight trade, but it takes away the emotion of day trading, and it still gives you the opportunity to have some sense of control of your trading. One thing that you may have noticed while I was buying and selling that option is that it was actually much higher. It was about 277 is how high it got, maybe 278, but I sold it for much less using a stop. And the question may be, did I have to use a stop? And of course, no, I didn't have to use a stop. I could use a market order and the market would have given me the price at the time. So maybe if it was 277, I would have gotten 274 or 275 for my option. I could have put in a limit, which is what we often recommend, is put in a limit, meaning it's say 277 right now, I'll accept any amount, but no less than 275, for example. So there's a little bit of wiggle room there, and you'll probably get the 275 or nothing at all. Maybe you went 274, better chance that you'll get that price. It just depends on what the bid and the ask is, and you'll have to take a look at what those numbers are before you actually put your limit order in. And of course, as you saw, you can chase things around, and I recommend you don't chase prices around like I did in the example. Make sure you know what price you want to get in at. If you don't get in at the price that you want, reevaluate the situation. Make sure you're not putting yourself in a bad situation. You can hold on to your options as long as you want throughout the day. Obviously, the further out the expiration date is, the longer you can hold them with less theta loss. Theta, there's something referred to as the Greeks in option trading. I'm not going to get too deep into that right now because it can get pretty complex, but it's extremely valuable. But as you saw that the options that were further out had further out explorations had higher premiums, but that premium goes down, and that is called theta, the premium loss over time. So over time, that price goes down. So that's working against you. If you buy an option today and hold on to it for a week, and the price of the underlying ETF or stock doesn't change, let's say it just stays the same, it'll be worth less. That option will be worth less in a week because of that that decay, that time decay. So it's important that you understand what you're doing and that you really have a good sense of where you want that option to go, and have a good sense of when you're going to get out of that trade if things are failing, because you don't want to lose all your money. Yeah, you're limited to the loss of what you put in. I put in $253. I would not lose any more than $253. However, I could have come out of there with $700. It's happened many times. The fact is, you just need to know what your tolerance is. How much are you willing to lose? Can you stomach losing half of your money, 25% of your money, and then trade accordingly? So I recommend take a look at the other videos on this channel, subscribe, hit the bell icon so you know when we upload a new video, and I'll see you on the inside.